Hey everybody, I'm Christopher Green. You're watching AMTV Alternative Media Television. I'm here with Ellen Brown, who is an attorney and president of the Public Banking Institute. She has written 12 books, including The Web of Debt, The Shocking Truth About Our Money System, and How We Can Break Free, and the Public Bank Solution. Now, public banking, Ellen, is almost kind of a confusing term, I think, to a lot of people. And so I know you're an expert in the field, and I want you to explain it, its history, what it's trying to accomplish, and how we can avoid potential pitfalls like what the United States and the rest of the world experienced in 2008 with a massive financial crash, meltdown, which ruined a lot of people's lives, extinguished retirement accounts, 401ks, Roth IRAs, changed people's perception of the world around them, the solvency of America, and our banking system in general. Thank you for coming on the show.
Sure. Thanks, Christopher. So how much time do I have for that?
Well, we've got as much time as you need. So I really want to dig into some of the details today. We typically broadcast anywhere from 30 minutes to an hour. So based on your comfort level and what you have to tell us, we can just kind of keep that window open. Explain to us in a common sense way, coming from the expert, of course, what is public banking and what is it trying to accomplish?
Public banks are banks that are owned by the government, which hopefully means owned by the people. In the United States, we have one public bank that's actually a depository bank, and that's the Bank of North Dakota. It's in the only state that escaped the credit crisis. In fact, it's done remarkably well every year since then. The Bank of North Dakota is the sole depository for all of the state's revenues. So that's their unique banking model, that all the state's revenues go in the bank. That the bank then, for capital, they were started in 1919, and at that time they were capitalized with a bond issue. But they're also set up as North Dakota, doing business as the Bank of North Dakota. So that means technically all of the assets of the state are assets of the bank. So they have a huge deposit base and a huge asset base, capital base. So they can basically advance credit for whatever the state needs. The secret to banking, or the reason why we want to own the banks, why it's not, some people say to me, well, what's the difference, UCLA, USC, public, private, it's all, who cares who owns it, it's all just banking. Mm-hmm. But whoever owns it actually gets the benefit of doubling your money. Banks are allowed to lend their deposits even though the deposits are still there. So what does that mean exactly, public banking? Does that mean it's actually owned by the public and the people? It almost sounds, public banking, the term, it almost sounds like communistic. Or public. What does that mean? People in our audience is very well informed. They know that the Federal Reserve, for example, is a private bank. There's nothing public about it. So how does public banking differ exactly from the current model that's in place here in the United States? The bank itself is owned by the government of North Dakota in that particular case, but 40% of banks globally are publicly owned, and that means they're owned by their governments. Some of them, we're mostly talking about state-owned banks, country-owned banks like Chinese banks, or the four BRIC countries, Brazil, Russia, India, and China, house 40% of the global population, and they are all public bank dominated. But there are also countries like Germany that have a strong local public bank tradition. So these are banks owned at the local level by the city or by the, whatever they call their canton or whatever, the province or our equivalent of a county. Mm-hmm. Owns the bank and is required to use the credit that you create by the way banks create credit. They're required to use that credit power for the local businesses in their community. So they can't speculate with it. They can't do all the things that Wall Street does with it.
Right now. And so that benefits the little guy, which a big criticism, and I worked on Wall Street before I ever got into media and started AMTV, was that throughout the financial crash and the crisis, the big banks were rewarded with the albatross of debt and gross bailouts supported by the American people. And what happened is the small and little banks and the mid-sized banks who had been playing by the rules couldn't compete any longer in the fallout of the crisis of 2008. And, what we continue to see is the little guy hurt by the banking system currently in place in the United States. What are other ways you think public banking actually helps the small man or woman in the U.S. and differs from our current situation?
First of all, the interest from the banking profits go back to the state, go back to the government. So in North Dakota, for example, that gives them a lot of money to play with. They can either cut back on taxes, or they can increase Social Security services, or they can build infrastructure, which is what they are doing, building a lot of infrastructure. When Wall Street takes its profits and invests them for their proprietary trading, for their own account. And most of that is actually contrary to our interests. They bet against us in derivatives, interest rate swaps, and so forth, which is one of the things that helped bring down Detroit. And I was just reading that this is very complicated how they do this, but they actually take our deposits, use them in the repo market as collateral for loans, so it's basically like money laundered cash, and then they use that cash in their proprietary trading, which means their trading department where they're trading for their own account, they're not trading for us, and they get to keep the profits. So they can use these loans that they get from our deposits to buy anything. They buy stocks, they buy commodities. They're basically buying up the country with our credit, and we can't even see it on the books. It's concealed in various ways. I think I'm going to write about that next because it's so shocking.
Yeah, well, it really is a casino gambling system, and few people actually understand that the derivative market is a multi-quadrillion market. That is tough to even picture in your mind. There's very famous examples, I wish were more famous, people like John Corzine of MF Global that literally ran his firm into the ground and overtly stole money from client accounts to cover the losses and the shortfall of his bad bets during the crisis. And these people walk around scot-free as free men when others like Bradley Manning, you probably saw yesterday, get 35 years slammed in their faces for simply leaking the truth out to the public. In your view, what caused the financial crisis and crash of 2008?
The crash was caused by a run on the money market, which is part of the shadow banking system. It's not part of the regular banking system. So we have all these safeguards in place to prevent a run on the conventional banking system now. We have FDIC insurance, so most people are covered, or deposits under $250,000 are covered. And we have the reserve requirement, the capital requirements, but none of that applies in the shadow banking system. It is just the Wild West of lending, and they are advancing credit based on very thin collateral. They keep rehypothecating this collateral, which means they lend it more than once. And it's the same collateral that supposedly our public monies are collateralized with. So the derivatives players, because the banks own Congress, essentially, they managed to push through the Bankruptcy Reform Act of 2005, which gives derivatives claims priority in bankruptcy. So they're going to get the collateral before anyone else does. And it's the same pool of collateral. That's the alarming thing, that it's all commingled now because Glass-Steagall is no longer in place, separating those two things. In 2008, it was Lehman Brothers that went down, and they were not a depository bank, so you didn't really have the problem of commingling deposits. Mm-hmm. But we've got that problem today, so we should definitely reimpose Glass-Steagall.
And that's a question a lot of Americans have. I mean, so what's changed since 2008? And, specifically, what's your view on the Federal Reserve keeping interest rates at 0%? I just received an email from a friend. Of course, we're local here in Phoenix, Arizona, and our real estate market was massacred in 2008. I mean, we saw home prices literally drop more than half. I'm getting emails now. There's a lot of people, the founder of the Case-Shiller Index says we're in a new bubble now. It's been only about a year and a half. We've gone from crisis to crash to the end of the world to the United States is finished and everything's going to come to an end. These were some of the words that came out of George Bush's mouth at the time, that we've got to go save the banks. Now we're in a new bubble. So what's changed? What should be done? And specifically your view on Glass-Steagall, should that be reinstated?
It should be reinstated, and that super priority in bankruptcy for derivatives should be repealed. Those are two things that should happen, but all that is still just necessary to lay the ground. I think fundamentally we need a new banking system. I mean, this whole thing of collateral, and it's all a fraud. The whole repo market is a fraud. It's one player gets to have it during the day and the other player gets it at night. So the bank needs it to balance up its books at night to make it look like the checks that went out of the bank were covered by something. They borrow the money at night, and then during the day they give it back. And so whoever owned it during the day gets to claim it. So they're both claiming it on their books. It's a massive fraud. And why do they have to do that? Because we have this concept that money is a thing that has to be, you have to get it from somewhere else. But if it were a public system, credit could be something totally different. Credit could be what we, the people, create. In other words, I saw this great video where that showed that money was actually, or what banks do is they create spendable IOUs. Mm-hmm. If you went to the grocery store and wrote out an IOU to the grocer, he wouldn't take it because he doesn't know you and he doesn't know if he's going to get his money back. So you go to the bank and you write out your promissory note. The bank turns that into something. They check out your creditworthiness and so forth, and they know where to find you and how to prosecute. And they take your promissory note, turn it into cash, which you can then, so that now they're spendable IOUs. You can now spend it at the grocery store. But who created that money? You actually created it by turning your own credit into something that you could spend. And that's what banking should be, and that's what a public banking system would be, and that's what the models historically are. For example, the original model in the United States, before it was the United States, would be the Bank of Pennsylvania during Benjamin Franklin's time. What they did was the government had the power to issue paper script, that was their form of money, and the government owned a bank. Basically, I mean, it wasn't even a real bank. It was called the Land Bank, but they had a division, which was their banking division, and they would print script, lend it to the farmers. So essentially, they're just creating money on their books, lending it to the farmers. The farmers would pay it back at 5% interest. Because the government had the power to create money, they could create a little extra. They spent that on their budget. So there was enough money out there to cover principal and interest, unlike today where banks create the principal but they don't create the interest. So there's always more money owed back than is created in the first place, and banks create virtually all of our money in this way, in this credit system.
Yeah, so it's safe to say, in your opinion, that public banking, it's working in reality in North Dakota today.
And many other places. There's so many models. I wrote the public bank solution as a sequel to Web of Debt just because people would say, well, North Dakota is only one state, or they've got oil, or that they set that up in 1919. We couldn't do it today. There are all these reasons why people say that example doesn't hold today. But if you look globally, there are so many examples. And if you look historically, there's so many examples where it has worked brilliantly well. And why did it end historically? It was always because the Bank of England or the Bank for International Settlements, I mean, it was always this big money power that came in and crushed it. It's the nature of the system that the crooks win unless you figure out how to regulate them. And then everybody has to be a crook in order to compete with the other crooks. So.
Well, yeah, that's the only way you can function in today's finance arena. Matt Taibbi of Rolling Stone actually spoke at a conference recently on public banking, which you attended. And he's spoken in depth on this. I'm a big fan of his work. Just, the cronyism in general that exists on Wall Street today. Again, nothing's changed. In order to operate within the Wall Street paradigm, you virtually have to be a criminal just to be a part of the system. What's your view? Topher Morrison, contributor here at AMTV, did an excellent report on Detroit. And he's working on part 2 now on the revitalization or potential solutions on how to revitalize Detroit, which is crime-ridden. The housing market is in shambles. Here we have this once historic, amazing breadbasket manufacturing part of America that has turned into a wasteland of sorts. Could public banking be used, in your opinion, to revitalize these types of places in the U.S.?
It definitely could. Actually, the man who ran against the current governor, Verge Bernero, is a Democrat. I think he's the mayor of Lansing. He proposed a state bank. He ran on a state bank platform, but didn't win. But here's what you could do. You could do like North Dakota does. Take all your revenues, put it in your own state-owned bank. You could capitalize it with Detroit, like every city, and like every local government has lots of money stashed away in these rainy day funds that they can't spend. In California, for example, the government tried to spend the highway money because it was short on its budget, and the court said, no, that's earmarked for the highways, and it has to be used for highways. But they're not using it. It's just sitting there and drawing a very tiny bit of interest because they invest conservatively with that money. They could take that capital, they can't spend it, but they can invest it. So move it over invest it as capital in your own bank. Capitalize the bank in that way. Take all this city's revenues and basically turn them into credit. So you still have the revenues and you can spend them as needed, but you also have the credit. You can make loans with it. And if the borrower and the city come for their money at the same time, just like all banks do, you borrow it from somewhere else. That's the way banks work. And they then have access to, they're now a member of the club, so they can now borrow at 0.25%, the Fed funds rate, instead of borrowing at 5 or 6%, having to worry about interest rate swaps, the whole rating agencies, et cetera.
Yeah, and that's one of the big things is access to credit for the little guy. I mean, look, if we're on Wall Street and I'm running a hedge fund, I have very easy access to credit. I can trade 10 to 1 on my portfolio. But as a little guy, how do I get access to cheap credit to expand a small business, to start a business? And these are a lot of problems I think people face. And, you look at Detroit specifically, how it's in ruin. There's also a technological shift that is currently taking place around the currency markets. And I wanted to ask you your personal view on new developing currencies and competing digital currency markets like Bitcoin, for example. How do you think that factors into the idea of public banking? Can they inherently work together, or are they diametrically opposed models?
I think they can work together. Don't really understand how Bitcoin works. I mean, it's so speculative right now. I wouldn't want to buy it myself because it's kind of at the top, and it's, it shoots way up and then it shoots way down, falls way down. So it seems to me right now it's kind of driven by speculation. But there are places globally, like I just wrote a piece on the Bangla Peso, which is a community currency in Africa. Now, this is a community that just has no access to money, really. And so they make very little money, and everybody is a business. It's every woman is selling something, or so they collected, I think it was 110 different of these sort of very small businesses, and they all got 100 Bangla peso, which was like $5 to start with. Sure. And immediately they increased the GDP by 20%. In other words, because the people had money to spend, they started buying each other's products. And so things moved off the shelves, not that they're on shelves, but they moved that otherwise you would say there was no market for. It's not that there's no market. There's no money for them. So we need to expand our money supply. And any of these alternative systems that would do that are a good idea, it seems to me, so long as you can get people to use them. And that's the problem. Like a community currency in the United States quite often is so limited that people just don't want to take it. They'd rather have dollars because they have to pay the rent in dollars, and there's so many things they need the dollars for. Mm-hmm. So ideally, it seems to me what we would have would be one great big community currency system. In other words, a truly public credit system is just a credit clearing system, which is a community currency system. I mean, it's just you give me something and I give you a little IOU for it, and then you can spend my IOU somewhere else. That's basically what it is. And so ideally, the whole country, or like the Federal Reserve, would be in charge of a system where it was all quantitative easing, or it was all money created out of nothing in return for something delivered to the government, or in return for these IOUs delivered to the bank.
So what is your view? I mean, if we don't change something, the course of the United States, I mean, where are we in the next few years, in your opinion, if nothing changes with the financial system and the model that's currently in place, and we don't move to things like public banking?
Well, it seems that I keep writing on all these great ways we could change things, but historically things don't really change until some big crisis hits. And I can definitely see a big crisis that could well hit. Both Bank of America and J.P. Morgan Chase have over $70 trillion in derivatives, and they have over $1 trillion in deposits, and they are now allowed to commingle all that into this big pool. So when the next derivatives crisis happens, the next bad gambling bet of the size of the Lehman Brothers collapse, let's say that was $700 billion just to bail them out, or to bail out the system. If that happens again, where in the whole derivatives market you take out a few pegs and the whole thing goes down, so it could be very expensive. Who's going to pay for that? FDIC insurance only has $25 billion in it. Dodd-Frank now says that we, the taxpayers, will not be responsible for another big gambling bust. So what they should have said is that you can't do it. But what they've said is, we're going to let the banks continue gambling the way they're doing it, but if you go down, we're not going to save you. So now what's going to happen is they've got all these bail-in living wills in place where they will bail in their creditors' money. Well, the creditors are us. It turns out that we, the depositors, are actually not bailees. We actually are owed money by the bank. We're creditors of the bank, and we're the largest class of creditors of the bank. Mm-hmm. So they're going to just take our money to recapitalize the bank. And as soon as that happens, just like in Argentina, when people went to the bank to pull out their money and they were told when the doors were closed, that's when they changed the system.
Yeah, and it's not a question of if, it's a question of when the next crisis ensues. Mm-hmm. And these are very scary topics for a lot of Americans because they were so affected. Good portions of the baby boomer generation have worked their entire lives and done everything right and saved money. And I saw this in my profession at the time working on Wall Street. And then they wake up one day, and because of the bad bets of people like John Corzine and, the upper echelon system of Wall Street, they suddenly see their accounts drop in half, or maybe, some of them have even lost everything. Diversification no longer worked. How can our listener tuning in, how can our listener help advocate public banking, get involved, and push some of these changes?
I'm president of the Public Banking Institute, and we have the bills pending in 20 states, or bills that have been brought of one sort or another for public banks. And so we have branches, or whatever. We have groups in different states working on this sort of thing. So if you're interested in helping, we could definitely use the help. It's publicbankinginstitute.org is the website, and it's got a lot of information. And then my new book, Public Bank Solution, has a lot of information on how you can approach. The first thing you need to do is to understand it yourself. I think some of these bills they got rebuffed at first, it's because people get very excited about this idea, but they don't really understand how banking works. And so they go into the legislators, and the big banks have their representatives there, and they can easily shoot us down because of a lack of depth in understanding. So the first thing you have to do is be able to match them at their own game, to understand how they're cheating, and
Yeah, and it really starts with education, and I'm a big believer in that. And the average American reads less than one book per year, so I'll certainly make sure to put a description and link to your book in our description box once we get all this re-archived. Any other places you think would be of benefit to our audience, either online or maybe a personal website where they can find you or read more information?
My websites are webofdebt.com and publicbanksolution.com and ellenbrown.com.
Okay.
Yeah, and I agree with you about books. I want to make some videos, some little videos, but that's another thing we need. Public Banking Institute is an all-volunteer organization. Nobody gets paid, and we don't have any. George Soros is not funding us, so.
He's not.
So
yeah. Well, the people definitely, we need the support of all the people. I, believe in the power of the people, and we can certainly change things. And we are on a collision course if we do not change something right away. I believe we will have another financial crisis. It'll pale in comparison to what we experienced in 2008, make it look like a church picnic. So we certainly need changes, and I certainly will encourage our audience to support you and bring more attention to public banking itself. And I think it's awesome too to create a debate around it. I personally think that we can do things a lot better than we currently are. Ellen, thank you so much for coming on the program. We're running out of time. We'll make sure we get this re-archived, and we'll certainly have you back on the show sometime soon.
And thank you so much.
Thank you very much. I'm Christopher Green, and you've been tuning in to AMTV Alternative Media Television, hard-hitting and in your face.